Yo, what's going on, everyone? Welcome back to once again another video. Today's video is going to be on my scalping strategy, how I scalp, and this is a live scalp example that I did take inside of the group, my Discord group. Everyone in the group did catch this, but yeah. So I know I haven't been uploading lately. I've just been really busy with a bunch of personal life stuff and other stuff, but I'm gonna try to upload at least 2 times a week now. More videos coming on in the future, and I have a lot of stuff planned. So let's get straight into this. So I had a lot of suggestions telling me to take some scalp trades, which is a live trade, a live scalp trade, basically meaning record yourself doing the analysis, record yourself entering, and then show the after. So this is exactly what it is. So let me just quickly mute the music because I'm not trying to get copyrighted, but yeah. So obviously this was my analysis. Now you can see the time, the date, everything. There's no replay mode. Well, technically this is replay, but it's not actually replay, as you can see right here. I'm opening a brand new chart and I'm going to do a brand new analysis explaining every single thing from the beginning all the way towards the end. So right now I just opened a new chart and I'm just marking up the trend. So what the overall trend is saying. Now we can see from a macro perspective, we have this swing point low right here, and then we have a swing point high. Now this swing point low to this swing point high, this basically tells us that from this range, from the low up to this high, was straight buy side pressure. It was a lot of buy side momentum, meaning smart money was overall pushing price towards the upside. Now at this point right here, this is where the market started to actually consolidate and show us some sell side pressure. So we did end up selling off, where smart money probably had some orders down here that it needed to mitigate and pick up, or maybe some type of liquidity. As we can see right here where my cursor is, there was some type of equal lows resting here, and maybe that's why the market ended up selling off to take out these lows right here. But remember, you can't get mistaken with the overall trend, because as we did see on this, the trend is still moving towards the upside. But from a smaller time frame perspective, you're going to see this on the higher time frame, but on the smaller time frame, you're going to see smaller uptrend structure forming like this. So when you do see like a breaker structure right here, you're going to start assuming that the market is overall now in a bearish market. But that's not how we evaluate the trend direction. Now, like we all know, there's different types of trend. There's obviously an uptrend, there's a downtrend, and then there's consolidation. But within these uptrends, downtrends, and consolidations, the time frames of where you're finding these trends matter. That's the most important thing. Now, if you find a consolidation on the 1 minute time frame, it won't be as valuable, because one thing is this consolidation on the 1 minute is probably just the market right over here getting ready to push up on the 1 hour or 2 hour. So it literally depends on what time frame you're finding these structures and what time frames you're finding these higher highs and higher lows. So it's important to analyze from a higher time frame perspective and understand the macro perspective and ideology of how price moves. Because remember, price doesn't move like this through every single higher low. It's not like the banks are buying this higher low, this higher low, this higher low. They have specific swing point swing protected lows and highs that they're adding positions onto. So for example, if I'm on GJ, let's say this is GJ right over here, and this is the H4 chart, and I see something like this happen, where am I going to assume banks are adding onto positions? I'm going to assume that they're adding onto their positions right over here, because this is where price originally accumulated price. We saw a consolidation after a big move towards the upside, indicating that this was indeed a reaccumulation, and then the market came back down towards that original area that had that major push towards the upside. So this gives you an overall idea that this move towards the upside right here that we're highlighting had big momentum, and had a lot of buy orders that were getting ready to get filled, and that's why the market ends up coming back down to fill this in. So look at this. You have a swing point low, a swing point high, and then once again a swing point higher low, and then a swing point higher high. So we're not worried about this little uptrend that we're seeing. We're worried about the highs and lows of the major swing points. So let's go back to this video and let me explain what I'm doing here. So right now I'm just marking up the trend, explaining everything, and basically at this point, this is the most important point. When we did create that low right here and then this high, and we created a higher low and broke it with a new higher high, that basically confirms that overall we're bullish. And in order for us to become 110% bearish on the 5 minute time frame, you have to break past this last higher low that created a higher high. These little breaks of structures here do not mean anything. So at this point, I am just going to delete everything and just marking up my chart. explaining the higher highs, higher lows, like I just did before, just explaining the macro point of the market and how the market moves, because we all know that on the smaller time frame, you're going to see stuff like this. And right here, I'm just explaining, in order for price to actually be bearish, it needs to break past the next low. The next low is right over here. This is that last higher low that created a higher high. And mind you, this is a lower time frame perspective of things. Even though I am on the lower time frames, I'm treating it as it is the higher time frames. If I was on the higher time frames, I would be doing the exact same thing. As we can see, price failed to break through the next low, indicating here that price is overall moving bullish. So clearly this area in itself was significant, because this is a last higher low that, one, swept liquidity, and two, broke structure or continued structure, and three, gave us a extreme push toward the upside, and four, we had an institutional candle. And you can see that's where price action came back down to, mitigate those orders inside of this area, just like I showed you right here. The market consolidates, pushes up, and then price comes back down to that original area. And that's exactly what we just saw happen. And we also had some liquidity here that the market ended up taking out. So at this point, I'm just, explaining everything that I'm doing, and just cleaning up my chart now. And momentarily, I will get into what I am looking at next. So yeah, I'm just cleaning up the chart right now. And as you can see, this is not in replay mode. You can look at the time of the charts. I know you see replay down here, but it's not in replay mode. It's just because I was using it before. You can look at the time of the charts and everything. This is a live trade. So right here, we can see there was a clean OB. Price came back to mitigate. Yeah. So basically, there was an institutional candle right over here that price came back down into mitigate. So what this tells you is that after this major move towards the upside, where we saw a major swing low that created a lot of bullish momentum, and smart money was adding onto their positions, this basically indicates that this level in itself, it still has some orders that market needs to come back down to fill. So for example, when you do get into a trade, right, it's not like the second, let's say I'm looking to buy like right over here. Let's say this is an institutional candle. Price comes into it and it goes up right away. It's not like price is just going to shoot up from here. What it's going to end up doing is it's going to consolidate a little bit and probably come back down and then go up. That's because smart money, they can't add on to, billions of lot size positions right over here. They need to balance out their portfolios, you can kind of say. They need to come back down to mitigate any sells that they had left over here, because this move down, this was sell side pressure of smart money bringing price towards the downside. After the sell side pressure did get violated with this break of structure right here that we are seeing, this lower high got violated, price comes back down to mitigate any more sell positions so they can add more buy positions. So that's generally what we were seeing right now, and that's exactly what happened. So right here, we also saw some clear liquidity before price tapped into our POI, and this is a big indication that the overall price is moving in a bullish market structure. So if there is liquidity being created above and below your levels of interest, what does that tell you? Well, obviously liquidity is being generated from retail money, retail dumb money, retail traders that are buying this support right over here. They're investing long-term, long positions. And you also have to think about the retail traders that are entering on that breakout. So there's liquidity resting here, over here. There's liquidity all over the market. And yeah, so now this move in itself is significant, really significant. We had liquidity being generated right here. That's what I'm going over right now. Yeah, so we had equal lows resting here. That means that retail dumb money is getting invested in positions once again too early. If retail people or retail traders that are trading the break and retest to support resistance, if they are getting into the market way too early and you see these equal lows, that is your indication that the market is not ready to go up yet. We're looking to get in when they get out. You have to wait for that. So if retailers are being greedy, be patient. And after retailers are getting stopped out, we see right here that the retailers are getting stopped out with this major move down. That's when they're fearful, and we're getting in for positions. So you can see right here, we have these equal lows. Retailers buy 1, 2, 3 touches. As soon as the market goes down, they're scared because now the market stopped them out. That's when we're getting into the market, which is the beautiful thing about institutional trading and smart money trading. So this move in itself right here, I'm just explaining why this move down is significant. You guys can read that right now, because it took the stops out. Exactly. So this move in itself is significant because it took the stops out and then it tapped into the POI and then moved up, breaking a ton of structure once again. So we can see market comes back down to mitigate, that previous institutional candle that I showed you before towards the left, to pick up any more orders and mitigate those sells. As soon as price comes down, what do we see? We see a big move towards the upside, and this is right after price came back down. So at this point, my point of interest would be this area. I'm now looking to enter for a buy position inside of this blue square that I just marked up. And I'm also showing that the current trend now is slowly moving towards the upside, because we did see that lower low, lower high get broken. So yeah, let's just wait for this now. And the confirmations we have for this is extreme. We have a bunch of confirmations. We broke structure. We took liquidity. We tapped into an institutional candle. We have sessions. We have a bunch of other confirmations that I don't want to go over right now. That's for a different video. But we have tons and tons of confirmation for this specific area. And once we do see this break of structure, a break of structure isn't just a break of structure. A break of structure is identifying that overall smart money is now breaking previous structure. Because above every single swing high right here, smart money was pushing price down. They're holding sell side positions to bring price lower. But as soon as we start violating those highs, we start violating those previous swing highs and swing lows, or in this case swing highs, this is our indication that now smart money is overall moving in a buy side direction. Now you have to understand things from a fractal perspective and read it like it's a story. The candles are telling you something. It's extremely important. So right here, what I'm showing is we did have that major move up. I'm just marking up my institutional market cycle. Now, right after that institutional market cycle, we did indeed end up consolidating, like I said in the previous videos. And we had these equal lows right here of this double bottom, and we had some more equal lows resting over here. Now, that basically tells us that overall we are waiting for price to come down to mitigate this last, or not mitigate, but to clear this liquidity over here. So we have a bunch of confirmation for why price does have to come back down. Now, this is my institutional candle. I found this on the 15-minute time frame. So let me go back in time just over here. So the institutional candle was found right here on the 15-minute, and I took the entire candle. Now, sometimes you'll see me taking the wick. Sometimes you'll see me taking the candle. It depends. You cannot take the wick if the candle has more body than the wick. But if there's more wick than the body, then maybe you could potentially take the wick to wick. So it's all about understanding the macro perspective. So at this point, I'm just listing the confirmations. This zone we are looking at tapped into a higher time frame POI, then went up, caused a major expansion zone, price swept liquidity, price broke structure, liquidity resting inside of our POI, and then we have our discounted levels. Now, at this point, this is basically the setup, and all I was waiting for is price to come back down into this POI so I can hold it to the next high. Now, I know someone might say, okay, but where is those crazy 7-to-1s, the 8-to-1, 10-to-1s? Let me get this in your head. You're not always going to get those 10-to-1s. You cannot get those 10-to-1s every single time. Whatever the market is going to give you, that's what you're going to get. Sadly, this is what I could get. And either way, my stop loss was pretty big, but I am only risking 1%. No matter how small or how big my stop loss is, it's always going to be 1%, which is the beauty of risk management. Now, obviously, I was saying that you could take your partials right over here, and I did show some long-term positions where I do see gold going, which is towards this high over here. But yeah, that's basically the setup that we were focusing on. Now, as you can see, this was all not hindsight. This was at current market price. And if you do think I'm lying, you can look at this right here. You can see that the minute is moving. Yeah, the minute's moving. The candle itself is moving. You cannot do that in replay mode. This is a live chart. Now, let me go over what actually ended up happening. So let's make our way down to trading view, and let's open up XAU USD. And as you can see, let's go down to the 15-minute time frame, and boom, price ended up tapping in perfectly into the open of our point of interest. As you can see that we did call out right over here. Let me go back right here. You can see we called this out. We were looking to buy right here, and that's exactly what ended up happening. The market tapped down into our POI, and then from here automatically broke our take profit for 190 pips. Now, I did have a runner running from here, so it did end up coming up over about 344 pips, which did end up making it into a 4-to-1. But that's not the point of the video. The point of the video is scalping is simple. It's not hard. It's the same rules that you apply on the higher time frames, but down to the smaller time frames. You have to understand that it's all about structure. It's all about understanding where structure is and where those swing highs and swing lows are. Over here, we can see that smart money started adding on sell positions. Every single swing high that we're seeing, for example, this is a swing lower high, and then once again we see another swing lower high. These positions are where smart money is holding sell. They're holding sell value, because there has to be value in everything you do. There has to be something backing it up. For example, price can't just go up without nothing backing it up. It has smart money, it has hedge funds, it has all this money that's backing price up to go that overall way. And that's what happened right here. We did see that smart money was holding sell positions, maintaining these swing lows or swing high lower highs, but eventually after price ended up clearing liquidity, like we did say right here, the market ended up breaking and just completely going towards the upside. Now, I called this out in the Discord community as well. Everyone did catch this trade. Well, I don't know if everyone caught it, but I did call it out in the chat. So yeah, so that's generally how I scalp, and it's not hard. It's really simple. Map out where the liquidity is, look at the structure, understand the structure, and don't look at things from a subjective perspective. Look at it from an objective perspective, but make sure it makes sense. Because what I say right now to you, it might not stick to your head, but you have to keep watching the video. You have to go do your own personal research. You have to go do your own back testing to actually start making it sense. Because what I say right now, I could say a bunch of stuff and it could just sound like, oh yeah, he's saying a bunch of good stuff, but how are you going to implement it? It's not up to me to teach you how to implement it. No matter who you buy a course from or who you buy a mentorship from, the only person that's really going to help you implement it is yourself. Now, I can give you the knowledge and the value and all these things to help you implement it, but you're the one who's going to end up taking the action. So overall, make sure that you watch this video, rewatch it, and understand how I took these sells, or how I took the scalps. It's not hard. It's really simple. It's right in front of you. There's no secret. It's all there. Now, obviously, we do have some extra information in the course that will stay only in the course. And if you are interested, link in the bio, in the description. And if you have any questions, message me on Instagram. But thank you guys so much for watching. I'm going to be posting a lot more live trades because I did get a lot of questions asking me to do live trades. So yeah, I'll be doing a lot more live trades and possibly a live stream on YouTube for a London session. But anyways, thank you guys so much for watching. Have a good day and peace out.